Hello, 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 everyone. Happy Tuesday morning. How's everyone doing? Good morning, Jacob. You're in first today, then Patrick. Sterling with the news, following up on everything. How are we doing? Good morning, Sterling. There it is. What else is going on? Good morning, John. Good morning, Christoph. Good morning, Mark. Thank you for, again, Mark, you're becoming a regular. Thank you for tuning in. All right, we'll wait for some other people to filter in. But we got a busy, busy day. We got Red Book just coming out at 3.1, slight bounce in that. So not completely rolling over yet. Now we have the S&P Global Composite and Services at 8:45, so 15 minutes after cash open. More important one, the ISM services, and so pay attention to any possible volatility or reversals around 9 a.m. especially, and keep an eye on prices and orders. See if new orders drops and prices if it goes up in services. So, well, at least that's what I'll be looking for. Not those specific things, but those are the components I'll be watching. Other than that, we got bar speaking. And then we have JPOW's first day of testimony tomorrow. So, pretty red morning. Even NVIDIA that was green starting to pull back. All the other chips pulling back. We got Target releasing their earnings was a beat. I thought it was hinting with the stuff they released that the consumer was really starting to weaken, but they still did beat and substantial gap up this morning. Remember, Costco is on Thursday, so Costco and Walmart rising in conjunction. Consumer defensive, not only because of Target's little pop, but also it's rotating out of a lot of other stocks, and your Magnificent Seven is down to like the boy, is it 3 or 4? I think it's 4, maybe. Maybe we're down to the fabulous 4. Tesla pulling back, Apple pulling back. Microsoft still has not broken key support, but Google and Apple both have. Meta's holding up. Amazon, Tesla got hammered yesterday, so keep an eye on that. Groups, again, I'll just do a quick consumer defensive only up 40 basis points, mainly led by a lot with Target. Technology and comm services pulling back. So we're finally getting probably a multi-day pullback starting. Well, we're going to have to see what JPOW says tomorrow. But unless the ISM services come in and drop substantially below 50 and the prices paid component drops substantially, I don't see anything with rate cuts or Powell being overly dovish. With that, we have a pause. Remember, the Fed next meeting is just over 2 weeks away. We have pause 1, 2, 3, 4 cuts still priced in. So the market's still acting a little more dovish than prior and still in extreme greed even with this pullback. So, good morning, Eric. Hey, Connor. Good morning, Heinrich. Can we look at CAR? Just CAR. All right. Well, just remind me. So I did not actually look at NIO this morning, but Target was a beat. Not much after we got CrowdStrike after the close, but nothing really of market moving. And tomorrow morning, really, Campbell's is about the only thing and that's not market moving. It's what I'm looking for in terms of inflation input. What else do we have? What else? So we get back to the S&P. The S&P, remember, last correction was a sideways correction from the rotation zone catching up. So this, I'm actually watching us to pull back to the rotation zone. I'm looking at 5100 to 5108 as a key area, 5109 specifically. That's where I'm watching for the pullback to continue. We just broke an area the support zone. Support zone was 51.23 roughly here. We based there, then about 51.17, and then we based there and then bounced, and now we're coming into about 51.13. But if we lose 51.13, this is going to be very key. Let me bump down this level right now going into the open, because if we break below that, then I'm really going to be focused on the continued bigger pullback, and the continued bigger pullback would be at least getting to the daily rotation zone. And if you're trying to pinpoint a level, I'm watching 5104 is pretty key for me. It's right around the closing area, 5103.75, the closing area from the 29th of February. Does not mean it has to stop there, but that's the magnet area I'm watching. Remember, we are multiple divergences up here. We've been on just 2 red weeks since end of October. 2 red weeks. We have not reconnected with the rotation zone either. I mean, this got pulled up with the price action. So this, we could easily still see a bigger correction even to 50, 43, 50, 50 area, which would not be out of line with reconnecting with the weekly rotation zone and then reassessing. Do we have a major topping pattern? No. The other thing, I don't talk about them all the time, but there's a lot of DeMark sell setups. A lot of DeMark sell setups up here that could get triggered. So also keep that in mind for the people who follow that. But that's something, you know, we don't talk about regularly, but they are in line. So we could be starting a bigger pullback. Last time they were in place, we only had a sideways correction. We got more volatility, but we had a sideways correction. To the upside, really we start, I mean, I'll be in choppy mode. It could be slightly choppy to bullish if we start getting into the 51.27 area, but that's why I'll be watching for key resistance. It really's got to start getting above there before I'm watching for a return breakout play. NASDAQ almost reconnecting with the rotation zone. The continued pullback area I'm watching with the NASDAQ was waning momentum on the last push up is about 17,990 to 1840. That's a very key support area. The minor support is coming in right around this 18.1. The major support is more 17,990 to 18,040. See who else is. Good morning, Martinez. Thanks, Sterling. NIL was a miss. Thank you for pointing that out. I did not have a chance to look at that. NASDAQ, same thing. Barely any pullback. The only thing I can watch going into the open, this is a little potential double. All right, that's the only thing. Now that could get invalidated if we push down into the open, but if it stabilizes around this 18,107. Now if this pushes down to 18, let's just figure out what would invalidate it. If it pushes below 18,088.50, it's off the table. But that would be the only thing bounce play, and it is against the 1 hour rotation zone. We might get it against the 4 hour rotation zone, so it'd be a very nimble area to watch for. But that's the only thing to watch for, the bounce play setting up into the open. And those targets roughly at this point, I'm gonna have to go, because if this pushes down, I'm gonna use the aggressive targets. If it makes this high or low, I'd switch to conservative targets. But at this point, it's about 18,220. 18,239 and 18,258. Yeah, thanks for putting in the target information, Sterling. The Dow, which is still holding up, because we've had some rotation into the Dow, the safety of the Dow, but the Dow's trading against very key support right now. It's key support area 38,860 area to about 38,800. You start breaking below 38,800, 38,719 and 38,563. 38,563 is key on a closing basis. Why do these keep disappearing from orange? Oh. So that's what I'll be watching there. Remember, everything's overextended from the weekly rotation zone. On any bounce, really, this 18,863 has to hold, but until I can get in more bullish mode, 38,975 would be key resistance. It's got to start getting above there before I could get in any kind of bounce mode. More sustained bounce mode, I should put it. Russell, after pretty much double topping and setting up a significant, yes, it is lopsided, but it's still, this key low from January is going to be very important in the Russell. Although today, the key area is roughly about 2058. 2058, and it's got to get it above 2072 before I'm really interested on the bull side, because I'm watching, especially with cycles at the top and rolling over, nearly over bot conditions, walking for the pullback there. The VIX, slightly elevated again, has to be dropping below about 1375 before I can start looking for the bullish side more aggressively. Other than that, key area I'm watching is about 1415. If we start rising above 1415, going to be really aggressively looking for a sell-off to continue. The DAX not out of overbought yet. Cycle's still heading down. So at this point, let's get to the stronger pausing bar, because this is a confirmed pausing bar. There's just nothing on any rally. The major resistance is about 1770. I'd be very personally, I'd be very patient with the DAX right now. The DAX, I'd be watching for some kind of a better pullback bottom pattern. The notes starting to get rallying. I think this market's just crazy with the dovish aspect. But after hitting the first, not to the second target, the key invalidation point is 111.27. The key area I'm paying attention to on a continued rally in the short term is 111.10. The yield is breaking below a support level below the 200. I need to see where today closes. I really want to see where today closes, because back a close above about 4.17 is definitely trying to hold the support. If it closes below that, then the next target is back to 4.07. But we're getting to cycle bottoms and nearly oversold. So going into JPOW, and if JPOW is hawkish at all, we could see a pretty decent bounce in the yield. Really watch those ISM prices paid numbers. So what else do we have? 10-2s, not much to talk about just yet. Going to see if this actually comes back to form a double bottom. Dollar index pretty flat for today, still holding up. Not much to talk about just yet. We could be getting some more decent setups, but it's still breakdown level 103.20, breakout level 103.80. Besides that, it's caught, and I need closes. If those break intraday, I need follow-through closes. Crude pulling back almost to the bottom of the rotation zone where it caught last time. Remember the rotation zone, the blue bottom of it, the blue line, and bouncing up above the 200. We still could see a more pullback to sideways action, but this is still basing at the upper end. So I'm really curious to see where today closes, especially if it sets up a potential %B buy for tomorrow. Other than that, not much to talk about in crude. Natty gas still stalling out. Didn't quite get to the third target. By the way, if it breaks above the third target, the next key area is about 213. The next major area is 213. So keep that in mind. Gold closing above the 62.5. Remember on Friday the 1st. And now we followed through with the 87 and then to the 100 now. Looking to chip away. This 2152 is very key. We break above that. Remember, long-term gold remained in the bullish pattern. Now it's finally got a little fire lit under it. We're looking at about 2193. Then major resistance area. Why is that? Oh. I hate when they do that. There's too much stuff getting cluttered on this. 22.19 to 22.40. All right. Silver, which never invalidated the double bottom, hitting the first target, almost the second target right there. Very close. I'd at least raise a stop again on silver. And I'd refine the third target to be a target area of 2470 to 2485. There's very key resistance up there. But now the major support is back at 2350 roughly. 2350 is major support, so that should still see some upward price action. The yen, no longer, this has turned into a mess, just a sideways mess. So it's really in the short term, the breakout level 150.80 and the breakdown level 149.60. Other than that, it's in no man's land. Euro, same thing, 108.60 on a closing basis or breakdown below 108. Let's get to spiders. These spiders, which remember, there's no little double in here. We're definitely gapping down today. 510 around the opening area. First area of resistance is around 510.65. Then you're looking at 510.85. And then you're looking at yesterday's close of 512.30. Those are the upside targets. To the downside. The very key is 509.50. And then, what's this close? Hold on once. I want to take a look at something. The key close is right around 508.08. And the key harmonic level is just in front of that, 508.25 roughly. So any close below 508.25 would also be closing into the rotation zone, and I'd be watching for that bigger pullback to possibly retest the lows from the end of February. So that's where that sits with the spiders. The Qs, gap down this morning, 441.02. So 441.98 to 442 is the first area of resistance. Then we're at about 443.50, and then the gap filled yesterday, 444.02. Very key support, 440.44. We break below that. Pay attention to the opening price of 439.90 and then the closing price of 439. 439 would be for a remaining gap fill, and 438.91. If we did close on the daily below that, I'd watch for a return also to the end of February lows. I already did gold, Pep. What is JPOW believes in America and is keeping rates higher? We will see. I believe he needs to keep rates higher. We'll see if they actually do. I don't see anything that would allow them to cut. Although you have good cop, bad cop with the Fed speakers. I think they're still trying to fake out the markets because I think they're going to try to possibly pause a little longer. Bitcoin coming up to the all-time highs, not quite getting there just yet. So again, we already put on the levels. If it breaks above 69,075,675 is the next target area. Already came back to the 65,600 support. If it drops below that, your next level support is 65,568. Now, what do we want to look at? Will gold retest? Again, if it can break above here, I'm long-term bullish. The long-term bullish signals is 2193 is the next minor target for me. So that answers that. Can we check out CAR? I haven't looked at Avis in forever. That's an ugly chart. That's how long it's been since I've looked at Avis. I mean, Avis, any rally would be, it's still in sell mode. There's no long-term bottoming pattern. I mean, you could watch for a short-term little double bottom there. But longer term, that is an ugly chart still. Next key target for me, if that double does not hold in reverse, would be right about 73. Other than that, on any pop, I'd be watching. It has to get sustained above 141 for anything for me to be bullish at. Anything. I know we had Intel. Intel after the little mini double. The only thing is a 47.65 invalidation point. Otherwise, it still has, it never closed below the rotation zone, interesting enough. And that's, remember, the key is on the closing basis. Pulled back multiple times to it, but never closed below it. Still, the final target would be 40.18, and then you got the 50 right around 39.65. So right around 40, I'd watch for some very key support level tying into that rough high right there. If it breaks below that, then let's just see on the bigger retracement area where everything sits. The next key area for me would be 38, and then on a closing basis, 34.69. But if it did drop to 38 and got through to 50, I would be at least watching for some kind of potential bounce around that 38 area. In which time frame, Pep? Again, things can remain overbought longer than you think, and it's longer. And if you just take a look at the gold pattern, top, 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 pull back, basing above key. Now, prior resistance becoming support. Don't focus on the wicks, focus on the candle bodies. You see all that support area, and now looking to break out. So this overbought can always become more overbought before you get a pause. Okay? And if it pulls back, you know you're pulling back into very key support. So keep that in mind. The only thing in the short term, if you're looking for short term, if you started to get a close back below 248, 2048 or 2049, it could be back into a pausing area and then a potentially delayed breakout. Well, they're bull market for penny stocks. That's, first of all, there's a reason penny stocks are penny stocks. So there's generally not a bull market in just penny stocks. Some can get into bullish if they are actually good, decent companies. I would stay away from penny stocks for most traders. It's gambling. And it's stuff that relies on Reddit boards and everything else to be juiced. It's not learning to trade or invest properly. If you want to set aside some gambling money, fine. It's not some way to learn to properly trade. And it's very thin, manipulated markets. All right, Tesla. Kiss this one goodbye. By the way, if you were looking at here, if you know the concept, and we'll go through that after I move. Walk away trend line is closed below that yesterday. No close below the 62.5, so depending on where your stop level is, but today it looks like it'll close. I'm still watching for this thing to dump. And finish the longer term pattern. But in the short term, this thing's pretty much over. Could not get above the first target. So that's where we sit right now. NVIDIA had this afternoon price action was pretty weak. Overbought in NVIDIA. So could this turn into could it keep going? Yeah, but I'm watching to see if we double top up here, if we do rally back up. Other than that, we start breaking below 837. We got a gap left behind, which could be a quick return to that gap fill. Would I be chasing NVIDIA higher at this point? No, this is where it's hit some very key clusters yesterday. It'd be watching at least for a pullback and reset pattern. But you have NVIDIA now starting to pull back. You have Google. Remember, I was talking about watching it reconnect with the 200 and the 132 area with this harmonic. We did that yesterday. I'm now watching. We did not close below the 62.5, so 130.80 is very key. If we close below 130.80, 128.60 and 124.40 are the next major target areas. But anyways, with this kind of breakdown, I'd be looking on any rally. With any rally to play rollover plays in Google. Would not be looking for sustained bounces in this. Also, iPhone numbers out of China very weak. Apple also closed below the 62.5. And you have the official trigger of the pullback levels. I'm watching for Apple. It just hit the 75 yesterday. Minor target 172.07. Next key target 169.90, so 170. And then a retest of the 167 area. So Apple also on any bounce plays, not to say there won't be bounce plays in this, but they'd be watching into the rotation zone and prior support becoming resistance. Remember, this was major resistance. It took many attempts to chip away at it. Now that's major resistance. All the people who bought on this area on any bounce, they have tendencies to try to scratch trades and sell against there. So you have Apple and Google breaking down. You still have... What? Why can I just... Netflix. If Netflix starts below 600 again, keep an eye for a starting potential bigger pullback there. But you know, I know we're going into the open. Meta's still holding up. So you're really getting this. You can have some Nvidia, some Netflix, some Meta. And I'm not saying you can have it as in those are the things you should be owning. I'm saying there's getting more concentrated. And then you have Microsoft, which has, you know, really not been, it had a potential head and shoulders. Now it's turned into a double shoulder. The key support is 397. To break below 397, I'd be careful then in Microsoft too. So you're getting this more and more consolidated. All right, I got to jump into the open, but just taking a look at this. So again, 513 into the open or 517 the minor for any kind of minor bullish bounce. The NASDAQ still has the potential double in play, but a long way off from triggering. In terms of the tick, not a tragic opening, almost down to minus 500, but this has got some heavy lifting before I get into more bullish mode. And if we roll over and get any spikes starting below 800, I'd be careful to the bullish side until we get some exhaustion plays. With that, I shall talk to everyone else. I'll have to look at some of these other things. MT just triggered a daily double top yesterday, only has a weekly 200 in its way. All right. So I will be back again tomorrow. Hope everyone has a wonderful trading day. Talk to everyone later. Bye for now.